This webinar started. Okay, this webinar is designed to help us discover the importance of a good credit score and let us help you end those sleepless nights of worry and anxiety. Before we get started, who is this for? This webinar is for anyone who has a credit score lower than 680 and desires to raise it so you can qualify for the best loans possible. On this webinar, you will learn how the top 3 credit bureaus determine your credit score. Be sure to stay until the end. You will receive a copy of my free ebook called Why Your Credit Score is Important and What You Need to Know About It. Sounds exciting, right? I have a question for you. Does this sound like you? Are you having problems with sleepless nights, experiencing extreme anxiety, finding yourself worrying a lot, experiencing fear, and maybe even having some health issues? How much time are you spending contemplating if you should get help, or are you procrastinating? Doing the same thing over and over again and getting the same results. This is called insanity, as we all know it. Stay where you are now or make a change. The real problem is we have never really been taught exactly how credit works, how it is calculated and used by the banks. If you understand what the FICO score is, which is the Fair Isaac Corporation, it is the credit scoring model banks use to extend credit to you. And the 5 different variables, along with their percentages, you'd make better decisions when it comes to credit. Yes, you can. You can create a higher credit score, which is possible for receiving more credit at a lower risk and show banks your loan worthiness using what you'll learn today. When you do this, you have the ability to get loans you have never had before. You will receive better loan payments and interest rates, a better lifestyle, and demonstrate new financial behaviors. Let me tell you a little bit about me. I have a BS, which is a Bachelor of Science degree in mathematics. I am a certified credit dispute associate. I have 2 different certifications of achievement. One is in as a personal financial coach, and the other is with the American Credit Repair Academy. I graduated from college to land a good job, which led me to $30,000 of credit card debt, to working at a Fortune 500 corporation for 23 years, only to get laid off, to starting my own business to assist people out of their credit or financial hole in order to be whole. And I love helping others. Let's look at some life-changing results. Case study number 1. One of our clients took advantage of an offer by Nissan to extend their car lease for 6 months and receive 3 months free. Unfortunately, Nissan reported this as a non-payment on their credit report. We helped our client fix the problem quickly and without a lot of hassle. As soon as the paperwork went out to the bureaus, the problem was corrected. This was critical because at the time, our client was applying for an increased line of credit to finance a remodeling project, and it saved a lot of money, including a lower interest rate, to have the credit score back up to 790 instead of in the 600s. Let's look at another case. Case study number 2. Another client went from not being able to pay their outstanding bills to paying off thousands of dollars after receiving money from an investment within 30 days, increasing their credit scores. You'll never have to avoid answering the phone when debt collectors call. You'll never have to worry about paying higher payments due to higher interest rates or worry about getting denied for credit. Do you really want to keep getting denied or paying higher monthly rates for items you want or need to live a better quality lifestyle? Do you really want this? Well, we use the power of the law to remove common credit reporting errors. There are 3 variables that make all of this work, and so I would like to review each one of them. Okay. Variable number 1, which is payment history. The example of that is that it's like the system is making it go quick. Let me go back to it. Sorry for the system. It's kind of moving slower than I'm talking. So let's go back to variable number 1, which is payment history. And an example of that is you want to be timely on your accounts, paying them on time. So some examples of that is paying bills on time, collections can be an example, late payments, and charge-offs. Okay? The next variable is utilization. And examples of that is this is a percentage of credit lines available, and this is the quickest way to raise your score, and is also the most important category. The percentage of available credit you are using is what matters, and you want to try to keep it between 1 to 7%. We encourage you to consider getting 2 of these types of accounts. And you can get a secured credit card and say put like $200 on it. But you want to keep the balance down to between 1 to 7%. And the key part of this is what people don't understand is that you really want to pay the card down before the statement date, not the due date. Most people pay it on the due date, but you really want to pay it before the statement date. So in order to find out what that is, just call the credit cards and ask them, when is the statement date? And that's the date that you want to use versus the due date. Okay. Variable number 3, which is length of credit. Banks look at how long you have been using credit. They look at the oldest account, which is how long you have had that account. You want to let them age. So the purpose when they talk about length of credit, it's very important to let them age. And remember, you do not want to open up a lot of accounts in a short span of time. Okay? All right, let's look at my final case. Case study number 3. I knew I needed to work on my finances, but had no idea how I was going to do it. Kelly got me signed up with her services in mid-June of 2018. By July 31st of 2018, my credit score increased by 100 points. I couldn't believe it. This company is the truth. I like that. All right. Now we're going to look at variable number 4, which is types of credit. It's like the credit mix, or, the types of credit. And so there are 2 types of credit. You have installment credit, which is like you pay X amount on a month for this amount of months. And there are 2 types of installment accounts. There is a regular contract, and then there's a promissory, which is not a regular contract. An example of like a promissory are like student loans or mortgages. Those are examples. And then revolving accounts. So those are like the credit cards. And that is where you have no set monthly payment. It could potentially go up or down. It doesn't have to have an end date. That's a revolving an account. So you want to have at least 3 revolving accounts that you pay in full every month. And that, by doing that, it shows the banks that you know how to manage different types of debt. Okay, waiting for the slide. Okay, there we go. Okay, and sorry, let me go back. Somehow the system is jumping quicker than me. So let's go back to the 5th and final one. Right there we go. Okay, we're on track. And the final variable. See, you too can do a webinar. It's, they're never perfect. You can do it. If I can do it, you can do it. Okay, back to the variable number 5, which is inquiries. Okay, and this is the number of inquiries and new accounts open in the last 12 to 18 months. This category can do the most damage if you don't know what you're doing. A lot of times, inquiries are a matter of record, and they can only be removed if you didn't authorize your report to be pulled. And so I encourage you to stop applying for different types of credit all at one time. And by doing this, the banks are kind of like questioning, what are you doing? And so they look at that. And so inquiries stay on your report for at least 2 years. And so you just want to really, really be careful with this variable number 5, inquiries. Okay? All right. Now, these foundational tips are just the beginning of what you need. Don't make the mistakes that others overlook. Knowing the system and exactly how the process works from A to Z, or from variable 1 to 5, okay, is the secret sauce to making it all work seamless. Yes, you can create a higher credit score that is possible for removing more credit at a lower risk and showing banks your loan worthiness using what you've learned today. Today, I promised I really did promise you, I promised you that in the near future, you will understand the 5 different credit scores, variables, and the percentages associated with each variable. So we go into a little bit more in depth about all of that, as we move forward. And you will learn what is being reported on your credit report from the 3 main credit bureaus. You will understand your rights based on the law, and based on your approval, we will work each item to get them removed from each report. Now, it takes at least 30 to 60 days before you will start to see results. Remember, this didn't happen overnight, so it takes time to work with the bureaus to get this done. But if we're persistent, it can happen, and you will find and see results. So, We will continue with the dispute process until all derogatory items have been removed. What would having a higher credit score mean to you? You have a choice. Here's how we can help you. Schedule a phone appointment by clicking on the link provided, which is the link is the Be Whole Financial Scheduling. Now, because this is a webinar, obviously, you can jot this down, copy it into the browser, and click enter, and it will pop up so that you can schedule a one-on-one. Okay, now as you're doing this though, we encourage you to fill out the qualification form and book an available date and time for your free one-on-one phone consultation. Now, the questions just help us to get a better understanding of who you are and what you're dealing with. So that's what the application form is. Okay, so don't be alarmed by all the questions. It really truly helps us to understand who we are speaking with when we jump on our free one-on-one consultation. Okay, this is only though for people who are serious about increasing their credit score, are willing to stick at it for the long haul. Like I said, it does not happen overnight. Credit repair can be time-consuming, but it can be rewarding once completed. And people who want to eliminate stress and anxiety, people who want to have peace of mind, and people who want to turn their life around, and lastly, people who want the ability to get loans they never had before with lower interest and payments. All right, well, while I go back to the next slide, this is, again, why I am here. So, I want to tell you why I am doing this. So, I am doing this because I offer free consultation calls because I truly want to help clients get out of the credit hole to be whole. And these calls help me to understand each client's situation and provide hope. If during the conversation we see a client is not a good fit, we will still email our free ebook for jumping on the call. Okay? So here's what to expect. All right? You will get our free ebook. It will be emailed to you after we have the free phone consultation, okay? And it's like we just together really have a passion for helping our clients get out of the hole, of this credit hole, or this financial hole, or this student loan hole, which I didn't even cover that. That's a sneak preview. So if you want to know more about that, talk about that as well on the one-on-one consultation. But our goal is here to get you out of the credit hole, the financial hole, the student hole, in order to be whole. I look forward to hearing from you. And lastly, I want to thank you so very much for jumping on this short webinar with me. And I ask that you schedule that call. I ask that we together help you be whole. And lastly, have a blessed rest of your day. Thank you.